Hello everybody. Welcome back to the channel where we talk about stuff. I know the last couple of days have been quite dramatic is an understatement. Stock market Armageddon. Not joking. This is what's currently being discussed within the financial world. I've tried looking around to see exactly what the cause might be, especially as we continue to get new developments, if you will, within all markets. The situation is that, as I've stated before in many other videos and also the one recently, nothing from the 2008-2009 crisis was actually solved. And the issue is that we put a band-aid on it, and now we're seeing a bunch of other cracks that are also forming in the foundation, if you will. The discussions now are, at the time of me making this video, if the Fed does not lower interest rates, we are probably, over the course of this upcoming week, going to see a tumble unlike anything that we've ever seen, or rather in a very long time, a couple of decades at this point. Futures are not doing well. Cryptocurrencies are not doing well. This is mainly because whenever any kind of economic turmoil pops up, risk assets tend to also fall down as well. So crypto falls and also stocks fall as well. It'll probably take a while for that falling to actually hit the real estate market at the exact same time. So the problems are people overreacted, but also I think it was something else that's tying into it. From the jobs market report, for those of you who missed it, it was announced that more people lost jobs or were trying to claim jobless benefits than previously reported or previously expected. This is because, as we've gone over, the jobless claim numbers are actually always completely false as well because of how they're actually measured in a multitude of different countries. It is not just within the United States. So we've seen before, over the last couple of years, every time that there's a slight smidge of bad news, you might have noticed markets overreact. I think it's mainly because everyone is kind of expecting a big crash. If we can all agree on that actual metric, the idea being everyone or people who've been in finance for a while, you know that something's off. You know that something's wrong. And this is why I think the last 2 years specifically, we've seen this massive run up in the stock market. It's people trying to make as much money as they possibly can because the system is completely broken. This isn't a guess, oh my gosh, maybe the economy is not doing that well. It's kind of everything. It's the real estate market. It's the rumblings that we've been hearing for a number of years now from China. One of their main industries was real estate. The idea is that the country would continue to grow and thrive forever. And then people stopped actually buying those homes. Everyone was taking out debt for those homes, and the companies who were also building these homes were also taking out debt as well. So when you have debt on top of debt and no one's paying any of it back, or if people are incapable of paying it back, you get that situation. And that's why a couple years ago when we heard about the entire Evergrande thing, that things really began to get quite shaky. The problem is, and I'm going to say that a lot, I'm telling you, is that this idea of inflation dropping is meant to kind of put everyone's mind at ease. As we've been going over, inflation has not dropped. It's actually continuing to rise year on year. So a lot of times if you hear that inflation has fallen, they mean in that one metric for that one basket of goods, but they're not talking about actually year on year, because the inflation rate would still be minimum 3 or 4% of things that have actually risen. So it's not since 2020. We're not on this steady line going sideways of just 3%. Things have only risen by 3%. It's year on year. And that's for that basket of goods that you keep hearing about whenever you listen to the news, and they tell you that you're delusional because your milk, your bread, your eggs, they've only gone up by 3%. What are you complaining about when you realize and you see all the other YouTube channels that they're actually 2 or 3 times higher than they previously were? The reaction to the job market numbers were, I think, the thing that people kind of Imagine like walking around constantly on ice and you realize that you have on ice skates, and then at some point, like, someone lightly taps you on the shoulder. That's the job market report, and you completely go into a spin. You slam onto the ground, and that's where I think we are. It's not that people are overreacting. I think that everyone's kind of waiting for the collapse. I'm going to try and be as honest with you as possible in all videos, but this has kind of been a long time coming. The saving grace, as it were, right now, is the idea that the Fed might lower interest rates. If they do not lower interest rates, we are on the downward roller coaster of our time, because the market is going to, the way that the market works is that everything runs on debt. If the interest rate is too high, people are less inclined to take out debt. If you lower the interest rate, people and corporations and companies and institutions in other countries are more likely to actually take out debt from that one space, therefore propping up the market even more. If it remains high, or if the interest rate continues to climb a lot higher, people are less likely to actually take out the debt, and therefore the economy does bad. We've gone over this as well as to why there's been so many layoffs. It's not that these companies are now just wink trying to downsize. They're doing it because they see that everything is going wrong, so they have to cut more people, to be able to show their shareholders that they're doing the right thing. The other, and this is a new one. The other excuse that I'm seeing right now as to why things aren't doing too well is because of Japan. Yeah. For those of you who haven't been paying attention to the news over the course of the last year and a half, Japan has been more in the spotlight because the value of their currency, the yen, has been doing terribly. We've gone over that a couple of videos ago, where you see a lot more people are traveling, taking vacations, and a lot of them are going to Japan because the value of the yen has completely collapsed. Most countries in the time of economic turmoil will actually print more money in an effort to actually devalue their currency. And you say, why would they do that? The idea is that if you devalue your currency, people are more likely to trade with you. If they see that it is 30% less to trade with you than to trade with the United States or to trade with Europe, they're going to choose your country instead. It's usually a throwing two swords up in the air at the exact same time, blindfolding yourself and hoping that you catch both of them. And this is where we currently are, because the problem is that people within the country usually are the ones who have a bad time because the inflation rate goes up, the valuation of their currency goes down. These people can't trade. Their jobs are also letting them off. And this one excuse that I found is one that I've never heard before. It has to do with explicitly with international trade. Japan apparently, for a very long time, had an interest rate. It says for 30 years, 30 years, had an interest rate of near 0%. The idea was, if you have the interest rate very low, people are more inclined in your country to take out debt. If they take out more debt, then therefore they have a 30-year period to pay back this debt, so the banks are then doing good. Because if they have a 30-year period and everyone's dripping into the bucket slowly, paying back their mortgages and paying back other loans and fees and stuff like that, the economy is constantly very strong. This also actually went deep into other countries were doing a lot of business with Japan because of this low interest rate. Apparently, a lot of countries were actually using Japan. They were, explicitly using them. They were taking the Japanese yen, which they were able to borrow at near 0%, and they were trading it for other currencies and other assets that would give them a higher return. So whenever they actually had to pay Japan back, it was near nothing. It was a 0% interest rate. So now Japan has actually risen their interest rate, and this is also another crack in the system. The idea being is that people are going to now be less likely to take out tons of free debt to be able to sprinkle around the world's economy to keep it propped up, because now debt, even in Japan, has become more expensive. The problem is that the entire system runs on debt. The entire system runs on this idea that people will take out money forever. I've been seeing so many videos, whether it be from CNBC or other companies, it really doesn't matter where you look. And they're constantly releasing information as to, and I told you this before, if you want to go on holiday, you want to go on vacation, take out some debt. Do you want to buy that nice fancy thing? Take out some debt. It's been ticking upward in the last 2 years or so. But this weekend, even the last week, I'm seeing it really like starting to mount. Where the idea is that when economies collapse, when stock markets go down, people tend to not spend as much. They stay home, they save, which is something you should all be doing in general. I tell you, it's like every third video now. For those of you who are new here, hello. Side note, please save money. And I mean even before this terrible Armageddon economic crash, I mean in general. You should have already a savings account where you are saving money every single month. That shouldn't be something revolutionary or brand new to hear, that there might be rough times in the future and you should have a stash of money on the side that you are like saving for a rainy day or month or a rainy year. You've seen the last 4 years, right? People live under this really weird delusion that everything is kind of all better and that the last 4 years didn't happen and that they don't have to save and they don't have to like weather any crazy events. I've been telling my friends for a very long time, and all of you for years, make sure if you buy something nice, if you buy something fun, an equivalent amount of that, put that into savings. Make sure that you're building up your savings constantly for situations like this. The discussion drags back into the idea of rate cuts. This seems to be the last card in the deck. That everywhere I'm looking, people are saying that the only hope is for the Fed to announce a rate cut, like soon, that they're going to do it. I'm not sure if you've seen it in the news. About 5 other countries on Thursday and Friday announced that they were also going to have rate cuts because they think it's the only thing that will actually incentivize people to take out more debt. The problem is that the system runs on debt, and you are incentivized, to be in debt for the rest of your life to prop up the economy. The whole system's rotten. The entire idea is for you not to save money, not for you to have your own money. It's for you to spend it, to be a consumer, to constantly prop up the market. So when people aren't spending as much, aren't taking as much debt out to prop up the banks and prop up the system, you are told that you saving money is wrong. What are you doing? Go out there and shop. Go have a good time. You don't have the money right now? Well, pay 15 this month and 15 the next month. And before you know it, you have 30 different things that you're doing this over and over with. So the last saving grace that we apparently have is for the Fed, the people who print money in the United States, to lower interest rates enough. The rumors now are 0.25% and or 0.5% to kind of get everything ripping and roaring. The issue is that we need a lot more than that. We probably need around 1 to 1.5% for people to actually be incentivized to once again take out more debt. But then the problem is, as I warned you, you shouldn't be taking out debt because the system wants you to be in debt for the rest of your life. So what do? How do we fix this? What's the answer? I'm not seeing any other finance, crypto, otherwise stock YouTuber telling people to save money. I'm seeing a lot of people telling everyone to, no, it's fine. Things will be totally okay. Give it like a couple of weeks, but keep throwing money into the market. That's not the answer. You need actual money to do stuff with, like literally like to pay your actual bills. So while you should be investing, you should also be saving. That's going to probably be a common theme that we have for a while. We'll see what happens. Literally tomorrow. We'll see if the Fed decides to have an emergency meeting, an emergency discussion, if the world will breathe a light sigh of relief. However, if they do not, we are probably going to have a very tumultuous August, like a very, very dramatically bad, and then still hoping that the Fed in September says that they'll lower interest rates even just by a smidge. Yes, just a dramatic update. I usually always say I hope you're all doing well, and I mean that even more so today than other days. I know that things are quite rocky. I have a lot of friends who are nearly exclusively in the stock market. This has been a lot for them. I don't really know what more to say. That's kind of the news that we have right now. The entire system is rotten. If someone tells you that it's just one simple thing that's causing everything, it's kind of like the straw that broke the camel's back, but then you look and its back was broken and completely obliterated the entire time. This entire system is messed up. We need a brand new system. But the issue is that the people in power, they would lose their power if we transitioned over to anything. If we made it easier to make sure that the everyday person or consumer didn't have to deal with debt, student debt, or any other kind of debt that they might have, the system would break because the system runs on debt. Anywho, I hope you got something from this. I hope you managed to have a great day. If you haven't started saving, like now is, good as time as any. As always, as I've said in the last couple of videos as well, this is not a joke. Look around your house for stuff that you do not want, that you do not need, and sell it. Get extra money in your pockets. Have extra money in a savings account or somewhere. You need something liquid in case of an emergency. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.